because this is one where we have seen fairly significant market falls for the year. And when it comes to the likes of the Dow, we're at 7% off the peaks. The Russell 2000 of small cap stocks, though, down 15.8%. So already in correction territory. And if it continued, we'd be in bear market territory.
It's not far off. It's our biggest short. We're 15% of our portfolio short the Russell 2000 right now. And all stocks get hurt in a recession. The Russell 2000 companies, I think, really can get hammered in a recession because of their debt levels. The large cap companies basically have tons of cash. They're buying back shares. They don't know where to deploy their capital. The small cap companies aren't in that same position, basically. They need to roll over near-term financing, which is easy while interest rates are zero, but they've got massive amounts of debt. And if any cyclical downturn there, they've got a lot more operating leverage as well. So earnings can get hit a lot harder on the small cap companies.
It's just fascinating, isn't it? Because if you think what the central bank policy has been, it's been to encourage people to take more risk, to encourage corporates to take more risk, and small cap companies have done exactly what the central bank has wanted them to do. Now could be sitting ducks if you do see a recession.
If you see a recession, and it is, they're very cyclically orientated just naturally, and they don't have the cash buffers.
Reminder for small business today, isn't it? Patrick, thank you very much. We're going to squeeze in a quick break coming up on the show. Warning signs from the US to Germany, but logistics giant Deutsche Post and DHL tells CNBC the fundamentals are still strong. More from that exclusive interview after the break.
Now get greedy whenever you want. Subscribe to the American Greed.
I can find and fund my car, from a Mini to a Jaguar.
Feel good car buying from findandfundmycar.com is the place where you can find quality used cars from trusted dealers rated by you, and where you can fund your car with finance to fit your budget. It's feel good car buying all in one place.
Shouldn't be a carry on, choose findandfundmycar.com.
At Romans, you can rent your next home from just £36, plus your first month's rent. No deposit.
No problem.
Romans, your trusted local property experts at romans.co.uk. Conditions and monthly fee apply.
Dad, I'm bored.
Why don't you go and start your holiday homework?
This summer, Asda have loads of free activity ideas to keep the kids entertained, like a scavenger hunt. Using the leaves, sticks and other finds, create your own art or characters, upload a picture with the hashtag #AsdaTourDeFun, and you could win a pair of kids' passes, giving you exclusive offers to the UK's top attractions. Go discover your fun side with Asda. For more ideas and full T's and C's, search Asda Tour de Fun.
This summer at Chessington World of Adventures Resort, answer the call of the wild. With over 1,000 of the world's most amazing animals
And over 40 of the wildest rides and attractions.
Meet the Gruffalo and all your favourite characters at the Gruffalo Summer Party, and so much more. Book early and save up to 40% at chessington.com. It's Britain's wildest adventure for all the family.
We've created unlimited data plans for your business because 1 minute you're the receptionist,
Hello, how can I help?
the logistics manager,
Okay, lift at your end. That's it now, to me.
the new business consultant,
Will do. I'll pop over and give you a quote.
and you've still got to make the tea. Your business doesn't have limits, so why should your data allowance? New unlimited data plans from Vodafone Business. The future is exciting. Ready?
Max download, upload speed apply to data. Coverage may vary. Terms at vodafone.co.uk/terms.
This is a plug. A plug for the future. Inviting you to join the forward-thinking riders, skaters, and drivers who choose electricity to get around. Charging their bikes, boards, and cars using power from EDF Energy, the UK's largest producer of low-carbon electricity. So, do you like the sound of the electric future? Come and join us. Generation Electric. Everyone's welcome. EDF Energy.
Well, with so much focus on the macro, let's not forget we've got some corporate earnings still coming through. Carlsberg has posted a 6.5% rise in first half sales on the back of better margins and premiumization. The Danish brewer reported solid growth in Asia, but struggled in Russia, one of its key markets, where total volume fell 3%. We'll hear from the Carlsberg CEO at 1100 CET.
Maersk has posted better than expected second quarter core profit and backed its full year guidance. The Danish shipping group said global container trade grew by about 2% during the period, in line with its expected annual growth rate of 1 to 3%. But the company added that further setbacks in trade negotiations between the US and China would hit the container business. Germany's economy minister has said action is needed in order for the country to avoid recession after GDP fell in the second quarter. But Deutsche Post DHL's CEO tells CNBC he is confident Germany can turn things around. Let's get out to Annette for more. Annette, those comments are key because this is a company that moves a lot of goods around globally, not just in Germany. So what's the message from Frank Appel?
Well, the message from Frank Appel is quite clear that he thinks that globalization gains cannot be taken away because this would clearly be not beneficial for everybody on the planet. So he's clearly hoping that we are going back to a world of free trade, or at least a world of less frictions to free trade in the sort of medium-term future. But let's also look at what Altmaier was saying, because it's interesting. It's kind of contradicting to what Angela Merkel was saying as of yesterday. She was saying that there's no need for any fiscal stimulus as of now from Germany because clearly the labor market is still doing so well. But what Altmaier is saying now, it seems that there is sort of a rift inside.
Had a sharp V-shaped recovery. I have read headlines that the euro will collapse tomorrow. It didn't happen. That many European companies will go down the drain. And if you look, Ireland, Portugal, Spain, even Greece is improving. So I have seen too many negative headlines which were completely overstated. I'm very optimistic that we are on the right path.
So currently there is a lot of concern about the state of the German economy, given a clear deceleration in economic activity, a lot of problems, for example, the car industry. So are you optimistic that Germany can do the trick again and kind of re-innovate?
Yeah, so first of all, we are very skeptical of the outlook all the time, and that's the reason why we are probably adapting then pretty rapidly. At the moment, all signs are pretty strong. You know, we still have lowest unemployment rate for a long time. We still have very good education. We are fortunately now investing more into the infrastructure. We are the front runner for open markets. These are the right things. Also, if you look into the startup scene, we get more and more investments into that. We have more companies who are on the rising path. We have terrific people. I see that in our own company. We have fantastic, well-educated people who help us to work with digitalization, artificial intelligence. So I have no doubt our natural skepticism and pessimism helps us once in a while to stay tuned, despite that, of course, Germany became a little bit complacent. We were proud of our own success somehow, but I think we will make the right turns in the right direction going forward.
Do you think the political changes at the top of Germany are affecting business negatively? Because it seems that Berlin is kind of concentrating on itself, more or less.
So I have not seen any major impact of it. I think it's always important that you have a clear path. I would wish to see a more midterm path. I think we need a more vision what we want to do with Germany, but more even what we want to do with Europe. I think Europe is a great place to work and to live. We have all the right answers to problems somewhere in Europe. Regardless what you do with dual education system in Germany is great. What the Netherlands did with pensions, the pension is adapted to your life expectation. Sweden has a carbon tax already. Austria has less problem with housing than other countries, so I think we can learn from each other. We do as a company that all the time. We look what our competitors are doing, what we can learn. We deploy best practices. I think Europe should do the same. Then Europe would be the best place to be anyway. And I always say that traveling around the world, I always love to come back to Europe because Europe is just a great place to live.
So from a micro perspective, it is quite clear, or at least, quite realistic, that German companies can innovate and can adapt to the new digitalized world. But the big question is whether those macro headwinds are not too big for them to actually succeed, at least in the short to medium term. Because if you look at what Germany is producing, and if you look where the insecurity or uncertainty lies, that is like a double whammy in a way. And that is why we're seeing the German economy going down so quickly right now. But for the medium to long term, as Frank Appel was pointing out, there is at least room for being optimistic about the outlook for the German economy, but that's not helping the markets right now, and it's also not helping the economic outlook for now. But that, back to you.
Terrific conversation to give us a sense of what could be lying ahead for very important German corporate on the back of those fears that were mounting yesterday around German growth. You can tune in for the full CNBC conversation with the Deutsche Post DHL CEO Frank Appel tonight at 2300 CET. So let's come back to Patrick Armstrong, CIO of Plurimi, after the sell-off we had on markets yesterday, the biggest sell-off for the Dow. One of the stocks that was falling aggressively that had an impact on the Dow was Boeing. Now, I know in Europe you have been holding Airbus. This has been a star performer, 45% higher year to date versus almost a 1% loss for Boeing. Is this just a relative story of the fortunes of one company versus the other because of safety fears?
I think that's definitely part of it. I think Airbus also has the potential to win from trade frictions between the United States and China. If it is a bilateral trade dispute, not a global trade war, you may see incremental wins for Airbus in China, where they may just decide, I don't want to use Boeing, and put pressure to make sure Boeing isn't used, things like that. You get a bit of a tailwind there. Airbus has also been hitting all their numbers, beating them a little bit as well. It's our largest holding in our portfolios. That being said, it's at the point now where it's not cheap. It's just under 18 times earnings, and that's the point where for a cyclical, we think that's starting to hit fair value now. So it's not something I'd be adding to today. It's got some good tailwinds. It's hitting its numbers, but it's at 18 times earnings, that's about fair value for us now.
I wonder whether you start putting some hedging in as well, because if you consider it's not just you, it's others with a very strong call on this stock. There are absolutely no sells out there in the analyst community. It sounds a little bit like Apple, and we know what happened with Apple. There's a couple of recommendations started to just shift to a sell or a reduce category. So do you think there is a potential for the stock to fall from here, which is why hedging would make sense?
Well, there's definitely potential for any cyclical to fall from here because there is a very weak macroeconomic environment. We've gone long European cyclical, so we own Airbus, we own Schneider Electric, we own Philips, we own Geberit, and our decision was we want to be long European cyclical risk that are global companies because everyone knows about the dire economic situation in Europe, and these companies are reflecting that. We shorted the Russell 2000, which we talked about. Those were companies that were priced for tremendous economic growth. So even though we aren't completely bullish on the macro environment, we'd rather take stocks that are pricing in some weakness and short stocks that were pricing in perfection coming into the year.
It feels like you're also interested in the more defensive side of the market. I see you're also long healthcare and media stocks.
Media, I wouldn't even call it defensive, but that's one area that's not pricing in crazily. We own Disney. That's probably our second biggest holding in our portfolios. And for me, it's more of a traditional company. It's competing against Netflix. I think it's going to win against Netflix. The market rewards Netflix for taking losses, but it punishes Disney when it generates a loss on the same kind of investments as Netflix is making. So if you look at what's going to win in streaming media, I think it's content. And Netflix gets rewarded for the billions they're spending on their content. I think Disney can monetize their content much more effectively. With the Marvel, the superheroes, you get toys, you get other ancillary benefits, you get the theme parks with Frozen coming out, you get the songs and toys there too, sort of things. So Netflix very good on binge watching, but I think the content is going to win out for Disney, and it should trade at a market multiple, and it's not right now.
You get a lot for your money in terms of all the different areas of the business. What jumps out though when you look at some of your calls? I mean, Philips was another stock that you mentioned, and Philips has been up 32% year to date. No sells on this stock either, and it does feel as though there's been a strong amount of herding mentality.
Yeah, I'm getting scared of these things. They've performed very well over the last year. They're probably up about 15 to 20% because they had a weak Q4. So year to date, incredibly good, but that just misses the Q4 numbers over the last year. So these kind of companies now, when we were buying them, they were trading at 13 to 14 times earnings, up towards 18 times. Dividend yield looks attractive versus the Bund, but it's fallen in value as the stock price has done well. So I'm getting a little bit worried about some of these stocks that the perception is everyone's scared to death of cyclical, but a lot of these cyclical companies have performed well now, and I think they're big positions in our portfolios. I wouldn't be adding to them at this point, though.
if we're in a market where our investors are taking stock about how much of a weighting they want to hold, are these the sort of names that they would sell to try and turn a paper loss into a paper gain into an actual gain?
It's potentially human behavior does funny things. So they sell good companies because they're taking a profit, and they keep their losers because they don't want to realize that loss. So there is a risk of that. I do think the thing that's going to support European companies and why I'm not selling, you're going to see capital structure arbitrage. Companies now borrow for nothing and they can buy back the shares the way American companies have been doing for years. And I think that's something that is going to be forced from CFOs in Europe.
Patrick, thank you very much. Juliana about to talk you through the market open coming your way. Signals are positive in contrast to the selling on Wall Street.
The CNBC app has new features just for you.
Hemorrhoids. You talk to your GP, but you don't really get anywhere because the NHS has limited surgery for hemorrhoids, so you go on suffering in silence. Okay, maybe not so silent. It's time to speak to Xroid. They specialise in a new, fast, safe and effective procedure for hemorrhoids with no downtime, and the procedure takes just 30 minutes or less. Don't be one of the 8 million people in the UK suffering in almost silence. Get back to what you love doing. Xroid. Be kind to your behind. For free advice on hemorrhoids, text KIND to 81156.
Dad, I'm bored.
Why don't you help me hang the washing up?
This summer, Asda have loads of free activity ideas to keep the kids entertained, like a scavenger hunt. Using the leaves, sticks and other finds, create your own art or characters, upload a picture with the hashtag #AsdaTourDeFun, and you could win a pair of kids' passes, giving you exclusive offers to the UK's top attractions. Go discover your fun side with Asda. For more ideas and full T's and C's, search Asda Tour de Fun.
Take care of your family with a Hotpoint Multiflow built-in oven. You pick the dish, it chooses the temperature and cooking method to get your pizza sizzling, your loaf rising beautifully, and your joints spot on. No more burnt edges and raw middles. Multiflow technology ensures your food is cooked evenly throughout. Perfect. If only you could control the heat outside the kitchen as easily. Get £50 cash back on all Hotpoint multifunction ovens at Currys PC World. T's and C's apply. Visit website for details. Ends 20th of August.
The sun gently fell below the horizon. Rays of pure gold filled the sky, illuminating the towering structures of the London skyline. What else could Jane do but gaze in awe? She was but a silhouette upon a hill, wrapped up in a spectacle so perfect, no words, oil paintings, or smartphone filters could do it justice. She savoured it. Before hopping back on her bike and riding off, she had to finish her commute home. Walk, cycle, discover. To the Mayor of London and TfL, every journey matters.
Oh, time is running out for the PPI, which means time is running out for me.
Oh, really? Give me the script. Come on, do it now. Well, that's harder than it looks. Remember, the PPI deadline is pressing. If you haven't complained to your provider by the 29th of August 2019, you won't be able to claim money back for PPI. Search FCA PPI or call the Financial Conduct Authority on 0800 101 8800.
European markets just opening up after a very rocky day yesterday where we saw the Dow drop 800 points. Markets really tanked as we saw that yield curve inversion between the 10-year and the 2-year, a key part of the curve that investors had been watching closely given it is such a strong predictor of recession. But interestingly, this sell-off looks as though it may be short-lived. European markets largely opening in the green here. We've got the French index up about 0.5%. The FTSE 100 slipping a little bit down about 0.18%. Trade war with President Trump delaying those tariffs set to come in September to December for the most part. So investors started out the week positively, thinking that maybe we were in for a de-escalation of those trade tensions and what that would mean for the global growth outlook. But now as the reality kicks in, that China data continues to be weak. In the session before last, we had that raft of China data come through on the weaker side. We also had German GDP come in and confirming a contraction for Q2. So yesterday was really the culmination of these growth fears coming to fruition and the reality that just because President Trump decided to delay a large majority of those tariffs due to come into effect in September to December, it doesn't necessarily mean we're in the clear. As we've seen time and time again, President Trump very unpredictable when it comes to his rhetoric around trade. Now, just coming back to European markets today, I want to remind you that Italian markets are closed for a public holiday, so we're just keeping an eye on these markets here. You've got beside me, and the DAX has just opened about 1/3 of a percentage point higher, so green for Germany, French, and Spanish stocks, a little bit of red on the board for UK stocks. Well, let's take a look at the German index, in particular, the stocks in Germany that are moving. As I said yesterday, the big focus for investors was that German GDP number. It came in line with expectations, but the key point here is that the German economy, Europe's largest economy, is contracting. And of course, that's driven in large part by what's gone on in Asia and the demand weakness that we've seen on the back of the US-China trade tensions. So the DAX is up about 0.2% at the moment. Right at the top of the board here, we've got Covestro, the chemicals company, up about 0.9%. So it looks as though a little bit of a cyclical tilt to trade this morning. I can see Heidelberg up here as well. BASF, the big chemicals heavyweight, also trading higher. So that's a look at the DAX for you. Let's get into banks next. Remember, Italy closed, so the Italian political situation not quite at the fore today. But overall, we're seeing some moves higher in the bank space as well. Yesterday, U.S. banks were hit quite hard in the sell-off. We saw 3% drops across the three major indices, and banks were very hard hit. The financial sector suffering a great deal. But here in Europe, we're seeing a bit of a rebound come through as well. The move's fairly muted, though, so obviously a huge amount of fragility remains in the investor psyche, as you would expect, given the unpredictable nature of the political climate across the globe. Let's move on to oil next. Yesterday, we saw Brent and WTI plunge about 3% as global demand concerns really came to the fore for oil markets. Now this morning, we're seeing the oil majors